Hi, my name is Rob Goddard. I've been buying and selling businesses for the past 20 years or so. Let me ask you a question. Have you ever heard of Froganomics? No? Nor have I, up until my conversation the other day with Dr. Marc Maurer, who works for a company called Volaris, and he will explain what Froganomics is. Enjoy. Hi, welcome back. My name is Rob Goddard, and I'm joined today by a good contact and friend of mine, Marc Maurer. Hello, Marc. Good to see you.
Hi, Rob. Thanks for having me.
And where are you dialing in from today?
I'm in Zurich now as we speak. Zurich in Switzerland, where I'm also living. I'm based on. Yeah.
Fantastic. And you and I are actually potentially on other sides of the negotiating table, because I've spent the last 20 years helping business owners sell their business for a top price. You're on the other side of the table because you work for an organization that acquires businesses, don't you?
Yes, and it's even more extreme. We buy businesses. So I'm part of a group called Volaris, which is also part of a larger group called Constellation Software. So we buy businesses for a living, and we have a special approach to acquisitions as we never sell. So I have absolutely no experience in selling businesses, and you do have a ton of experience in that. So it's a good complementarity here, right?
It is. Well, I mean, we'll touch on that in a moment about the Volaris, the Warren Buffett method, as I call it, which is to buy but not sell. Although
Correct.
he has made some sales recently.
Yeah, we're a bit more extreme than the original, I guess. We never sell.
But we'll come back in a moment to the Volaris model and why you're different in the marketplace, particularly the tech sector. But a little bit about you, Marc. Just let the audience know, who are you, what's your background, and how on earth have you ended up working in mergers and acquisitions?
Yeah, that's a good point. So I'm Marc. I'm, as mentioned, based in Switzerland. I live there near Zurich with 3 kids. So it's Faye, Aaron, and Liam, and my wife. She's called Dia, like the day in Spanish, right? So we're Swiss people. So oftentimes go hiking in the Swiss mountains. Sometimes it's a bit crowded now during the pandemic because everybody likes doing that. But other than that, I'm with Volaris since 7 years. First as an M&E director, and since a few years, 2 years actually, I'm building up my own portfolio of companies. Before that, I was with some technology businesses, SAP, Alcatel-Lucent, and so forth. And I stumbled into M&A more by accident than by plan. But I have to say I really like it, and now I oversee as a portfolio manager 4 businesses. Oversight means I coach managing directors of these businesses. Among them is a courthouse software business, social welfare business, quality management for German hospitals, and the last addition to my portfolio is a Swiss pension software. So quite a spread, I guess. But we're open for any kind of B2B software, so it's really fun.
Yeah, and you and I came across each other last summer, and you're part of the international coaching group that I facilitate.
Yes.
So we connected last year, and whilst you don't own Volaris, you're very much in.
Unfortunately, yeah.
Maybe one day. But you are very much at the front of the acquisition. Do you get involved in doing the deal with
Yes.
a potential target? So you're involved in the deal negotiation, and then you're involved in the post-sale acquisition integration.
Yes,
Right.
it's like end to end. So from the start to the finish. So I have to live whatever I bring into the group. I have to outlive it, so to speak, which is encouraging. Yeah.
You know, I've always said that about salespeople, that salespeople, if they sell something, if they sell the dream, they should deliver the dream.
Correct.
Yeah.
Correct.
So some of my audience will be intrigued to understand the strategy Volaris has, which is you buy and you never sell. So how does Volaris make money?
Yeah, well, first, we don't buy experiments. So means the companies that we buy are established software businesses. So oftentimes they are 10, 15, 20 years in the market. We we sometimes buy businesses that have been in the market for 30 years. So they have customers, they have established relationships, they have partners, they have a business that's running, right? Which is always good if you never sell, so, right? What we do, although we never integrate businesses, so we're not a strategic acquirer that functionally integrates businesses, but we leave them standalone, which offers a couple of advantages for the company, but it also allows us to have these different businesses, and it's more than 100 now within Volaris alone. They share practices with each other. So every business that comes into our group does one or two things in a really, really good way, and a couple of others maybe in a medium good way, right? And these businesses, they get a lot of platforms where they can interact with each other, and also people like me help businesses to get in contact with each other. And so they learn from one another. They overtake processes, they get insight from other sides, and by that they typically improve, they typically increase their growth rate, they're also becoming more profitable along the way, and that's something we tell ourselves, why should we sell something like that, right?
Yeah.
It's a good business for all parties involved.
So your Volaris is building a group of independent businesses, and you're playing your part in being the cement that holds that group together, or some of that group together.
Yeah, the gum. Yeah,
the gum.
Kind of. Yeah. The gum, the bubble gum, right?
Exactly. So it's a model I'm familiar with, because I sold a UK engineering firm a few years ago to a Swedish company that has the same format. So some of this audience listening won't be familiar with that. So you offer an alternative to a big conglomerate, effectively hoovering up businesses where they lose identity. They're brought into a huge company. What you're doing with Volaris is you're keeping that individual identity and autonomy within a group structure, so they get the benefits of support, but they don't lose their identity or what makes them good.
Exactly. It's almost, it's not like a super tanker. So I have worked at SAP. I know what's a super tanker is feeling like. It's more like a fleet of ships, of nimble kind of super yachts, right? And they're all in one fleet. So we all steering in one direction. But each ship has its own captain, its own team. Everybody has an own support team, an own development team. We think scale is overrated, so we don't mix companies up and merge them together. But all those ships, they communicate with each other and they help each other. And when a storm is coming, like the pandemic, we do help each other. And we have some businesses, depending on the verticals they're in, they're really suffering at the moment. We don't sell them, we help them. Right?
Yeah.
And it's always good during these tough times also to feel that you're not alone, right? So I hear our managing directors, they really appreciate that they can interact, especially during these tough times, as they feel they're not alone, right?
Yeah.
I think that's an important aspect of it.
Very much underestimated. There is safety in numbers in that sense. I like your analogy of a fleet of super yachts rather than one big oil tanker.
Yeah. And we even have actually a software business in Germany that provides software for super yachts. So it's I always tell the guy, please take me to a customer visit, but I never achieved that so far.
Not yet. Maybe after this video.
Yeah, don't know.
We've already given them a bit of a plug, advertising-wise.
Yeah. True.
So I know many of the people that watch these videos are people who want to sell their business, so own a managed business. So they want to sell one day, maybe not tomorrow, but maybe in a few years' time. So it would be helpful to get your insight, Marc, when you're on the buy side acquiring businesses. What are the things that you look for in a potential target company?
Okay. I think every buyer has its own criteria, right? I'm typically using an acronym called STST. So the short sentence to remember is sell the software today. And these 4 letters stand for, the first S is size. So for us, business needs to have a certain size. It's typically 2.5 million British pounds or 3 million euro. So that's the minimum size. There's no limit, but most of our businesses are sort of between 3 and maybe 20, 30 millions in turnover. The second, then the T is the type of business. So as mentioned, it's typically an established software business. It's a B2B software business. It's oftentimes having a recurring revenue streams. So most of the companies that we acquire 40, 50% in recurring revenues, either with maintenance support or software as a service subscription fees. Then the next S is the scope. So what's the scope of services and software they provide? Typically, it's a niche business. It's as mentioned, B2B. It's selling software to a small market. We don't like so much software businesses that sell to like everybody, but rather to a small group of companies. So we much rather have a business that has a high market share in a small market as opposed to a small market share in a huge market.
Interesting.
Right? So this is also a bit counterintuitive. And the last T is really timing. I think timing is everything. Because when I'm talking to business owners, they all like our model because it's so different. But there's always like a good and a bad time when you sell your business. And so I oftentimes have to speak to business owners year over year over year. Sometimes we speak for 10 years with these owners.
Wow.
And so there's also some patience involved in this. So these are the 4 letters, basically.
Yeah, yeah. And out of interest, how many target companies do you need to analyze and review in order to get one eventually over the line and part of the family of businesses that you take on? Do you have a feel for that roughly?
Yeah, I would say it's probably one in 20.
One in 20.
One in 20, not 1 in 20 we're talking to, but I think 1 in 20 we're giving out like an offer to, because sometimes we give an offer and people are not really motivated to sell the business. They just want to have a price. So timing is not right.
Yes.
And we also have to speak a lot of people to engage with them in a process. So it's a low conversion rate. I sometimes label this as like Froganomics, right? I do need to kiss a lot of frogs, and I think the metaphor is kind of right, because if I'm typically interacting with business owners, I always try to imagine myself into the shoes of these business owners, and as a owner of a small software business, it's almost like herding cats. You have a lot of different people, personalities in the software business to manage. You have some challenges from your customer. It's not easy, right? But it's always very, very like interesting. And if I interacting and talking to these business owners, I come kind of close to their business. It's almost like kissing a frog, so to speak. So I never kiss business owners, so don't get me wrong here. But never did that, and I'm married and whatever. But I do have to kiss a lot of frogs until I have a frog that's not jumping away, but remains sitting and sort of turns into a princess. And I think once we buy the business, it's really like magic, because I think a sale, and this is also maybe something for those people hearing this also to consider, I think a sale is unlocking a lot of things, not necessarily just because it's Volaris buying a business, but just the mere act of selling a business is making people more open to consider new things, to revisit their assumptions they had on the business. And typically this creates many cool things, especially if you're bought by a buyer that has some long-term vision for the business and not just like short-term buy and sell and buy and sell. So I lose much more likely against maybe a strategic buyer that has at least a strategic rationale, as opposed to these private equity that just buy and sell for a living, where it's more a transaction than everything else. So I often speak about this. It's also having a transactional element. We're moving money, right? We're paying it always in cash, but it's more of a partnership. For us, it's like a marriage with no option to divorce, right?
Do you know what's reassuring, Marc, is that with Froganomics that you mentioned there, that the Swiss have the same sense of humor as the British.
Yeah, it's. I think there's. We never been in the European Union, and you're now out, so we're very familiar.
We're closer cousins now. We've gone down the Swiss route.
Yes,
and the Norwegian.
And you almost have a Swiss red T-shirt wearing, so it's very. There's a lot of rapport between us, I guess.
My fiance would say it's Albanian red.
Oh, okay.
But you're right. So just going back onto what you were saying there. So that's how you differentiate yourselves from, say, a private equity, which are only in for a few years, then they flip the business because they make money on the exit. Whereas you guys are strategic partners. So are you buying 100% of the equity, or a minority, or a majority stake?
Yeah, for most cases, and most cases means literally like almost 100%. It's 100%. So I always frame it, it's all in, right, or all out. And I think one of the reasons why we like to have 100% is also we share a lot of best practices once they come in our group. It's almost like a secret sauce of our group, because we learned so much over the last 20 years. We're doing that from all these different software businesses, and this kind of proprietary knowledge on how you best run a software business. And we only want to give this to those that are in for the journey. And that's the reason why we always buy 100%. And I think some people that might be hesitant for selling 100%, and I can assure you every reason they have has more to do with how other buyers sometimes behave, as opposed like to us. So either it is to keep in control. We have a very decentralized model, so that by that model, they can keep in control of the business. And the other thing is, sometimes people are hesitant to sell 100% because they want to share the upside. We do have the model that our parent company, Constellation Software, is quoted on the stock exchange, means we can give shares and will give shares to the leadership teams, so that growing the business in our group is actually creating a financial incentive for them as well. So there's no reason not to sell 100%.
Yeah, well, Constellation themselves are a multi-billion cap business. It's North America, isn't it, that they're listed?
It's not North America. It's actually Canada, which is I always say it's like the Switzerland of North America, right? So it's really different. So it's not the US. It's Canada. Right.
I know a number of my US and Canadian partners laughing at the moment when they're watching this. See, to the British person, North America is Canada and the United States. I guess that's because we used to own both of them.
True.
Things change. Yeah, exactly. But we gave them independence, which is very benevolent of the British.
Grateful. Yes.
So get back to business. So okay, question then. With your model, does the current shareholder or shareholders, do they typically stay on after a Volaris acquisition or not?
Yes, please. So that's definitely our preference, because unlike my time at SAP, SAP is a great company, but sometimes people, they were used to manage business, I would say, from their computers. So they never seen a customer. And I think with us, we like these managing directors. They're very close to the business, very operational, right? Typically, clients have the business cards of these managing directors. They call them when there's a problem, right? And sometimes there is. So they have much, much more value to be added than just doing the HR or doing the finance. They integral to the business. And so our preference is always that they continue leading the business. Now, sometimes people sell to us because they want to go for retirement, which is fine. Then the next second best option is then we might promote somebody from internal business. We can provide coaching. So we do often coaching of leaders from the business. I think we have a statistic like more than 75% of all the companies within Volaris are either led by the existing managing directors that were active when we bought the business, or by people that we promoted from within the business. Of course, if that's not possible, then we hire from the outside. But I think if you check for this statistic, you will see there are different numbers coming from other types of buyers.
So you actually just touched on a very important point, and something I've been banging the drum with business owners for the last 20 years who want to sell their business, which is that as shareholder, they don't need to run their business. They could make themselves redundant, still own the equity, but they've built up a senior management team. And of course, when they meet someone like you and Volaris, that's a big advantage because they don't have to stay on, do they? If they've built a senior team where they maybe just turn up a couple of days a month for board meetings. I mean, that's the nirvana, I guess, for a buyer.
Absolutely. And I think I would call it like the leadership infrastructure. So it's not like technical infrastructure, it's like leadership infrastructure. And I think if there is already that infrastructure present with a good quality management team in place when we buy the business, I think that's great.
Yeah.
If there's at least, say, potential in the team and they need some coaching and so on, I think that's great too. And so we also oftentimes have leaders that sell their business to us because they tell me, okay, I'm now approaching like 60 years or I'm in my mid 50s. I want to run the business for a couple of years. And we're happy with that. And we basically help them to recruit and develop a team along the way, right?
Yeah.
Which is, of course, if you buy a business as a buyer, you always want to have a team in place that continues running the business. That's a very important point.
Yeah. So it would be helpful because I always think there's learnings in looking at the reverse. So we've looked at the positives in our conversation about the things that you're looking for. But in your experience over the last 7 years, what are the red flags? Are there perhaps 3 things when they come up in a discussion you think it's not for us? Can you think of it? The top 3?
Well, I'm not sure if they're the top 3. So one thing that definitely comes in mind, if a business is run by a guy in a very autocratic kind of way, so people have no say. They can only say yes, yes sir, yes sir,
yes sir. Yes.
So that's creating kind of issues post-close oftentimes, because you need to teach then these people, okay, it's okay if you speak up, it's okay you make mistakes, because only if you make mistakes you can actually learn from them and improve, and that's really like a cultural shift. And that's a lot of hard work. And I have seen situations where we turned away from an acquisition because the guy is running his business almost like a kingdom, right? And we could see ourselves, okay, there's a lot of work that needs to be happening here, and maybe the business is too small to invest that type of work. I think that's one. The other thing is, if we really feel that the business is doing bad things to customers, in a way that they manage their clients in a very destructive way, we sometimes get nervous what happens post close, because you never know. Maybe the customers are just like waiting to leave the business, and maybe an acquisition is giving them like the excuse to do it. The other thing, but we became more relaxed with that. So a couple of years ago, if the business had a very concentrated customer base with just like 1 or 2 really large clients, it's like binary. I think we sometimes looked at this and say, okay, there's a lot of like risk involved. What happens if XYZ leaves? We have become much more relaxed on this, because typically if you have such large customers, they are also depending a lot on you, right? Especially in software businesses, so there's a lot of switching costs. And once you manage through the first 1 or 2 months after an acquisition by Volaris, for the clients, it's typically good news, because it's not a big strategic buying them and then you have to worry that the software is gone in 2 years. That buy and hold forever approach is also good news for the client. So they typically then start reinvesting in the software after we acquire it. So that's maybe things. The only other thing, and I think I'd like to be transparent in that regards, there are some things that change when we buy a business. So I remember when I started with Volaris, people told me, okay, if you are interacting with a business owner, you first tell them it's business as usual once you sell the business. It's not. It's just. I mean, that idea is why would we buy a business if it's business as usual? I mean, we like to support the people to improve the business, of course. But I think while our integration is very light touch in many ways, we do integrate the financial system on our systems, because we're a public company at the end of the day. We have a monthly reporting and a quarterly reporting cycle. Sometimes this means we bring in a finance person that can manage that reporting. We don't do it for the sake of reporting. We have a pretty interesting and proprietary kind of KPI system within all our businesses. And we do it and we measure all the things in a consistent way so that we can benchmark businesses. And we do that so that business A can learn from business B. Because me as a managing director, I can every time see, is my R&D development team, is it like green, top notch? Is it like average? Is it less than average? And who does it better, right? From whom I can learn. And we can only do that if we have our own language and if you're looking at the numbers in the same way. So there is typically a bit more reporting once you be acquired by us. But I think you also get more transparency. And I sometimes see managing directors saying to me, holy crap, I didn't know that. If I didn't know that, I would have done this and that. And so we always say transparency is really powerful because it unlocks learning. And I think at the end of the day, we're a learning community. Right.
Well, I couldn't have put it better myself. I'm conscious of time. I've got one more question for you.
Yes.
Which is there'll be a lot of people thinking 1 in 20, and that's not 1 in 20. That's just to get to an offer stage. That's not completion.
Yes.
So some people will raise their eyebrows. So in order to make your job a little bit easier, Marc, going forward, and the 1 in 20 becomes 1 in 10, what can sellers do? What's a key thing that sellers can do to make their business more attractive and stand out of the crowd to people like yourself, but also make it a smoother integration post-acquisition? Is there one thing at the top of all of this that they can do now? They can do it tomorrow. Start doing it tomorrow.
Yeah, I think any buyer likes to avoid surprises, right? And any buyer probably values predictability, right? And if you have a software business, you have a very good basis for predictability, because typically a software business has a certain degree of their revenues in recurring revenues, so that you can plan for that, especially in a pandemic, right? I mean, most of our businesses have half of their annual revenues built actually at the 1st of Jan, right? So this gives a lot of stability. But we see, especially in these small software businesses, we see really like a lack of process, right? And that lack of process sometimes creates a lot of complexity in the business, which is unnecessary, right? So I have in one of my businesses, I think it's a mid-sized software business with 5-6 million euro, and I think we have like 1,000 products. because for each customer, they sort of tweak their products a little bit and here that, and it's really like a challenge to streamline, for instance, the billing process and to make it a bit more efficient so that we can unlock some more resources to do more things for R&D, to develop new products and so on. So I think being conscious about having some sort of processes, just like any sort of process. I'm not talking about the IBM process-driven enterprise and something like that, just like very minimal standard operating procedures. I think that's very good. You also make a good impression to prospective buyers if you have your numbers at hand. And so typically if prospects or companies go on the market, and sometimes they get help by people like you, by like a broker, and what they do, they spend a lot of time in putting together what they call an IM, an investment memorandum, whereas the business is portrayed across 50, 100 pages and so on. And I think the work that is required that you can put together this book, so to speak, is actually work that's also useful if you run a business. So why not, even if timing is completely not right, why not thinking about if somebody would like to sell, to buy my business, why don't I document my key processes? Why don't I ensure that I have like a monthly reporting cycle? It makes a good impression to any buyer. It allows you to run your business in a more proactive way. So I mean that's one thing. So maybe the focus on repeatable processes. So that's something I would recommend.
Yeah, and just to underline, you don't like surprises as a buyer. A bit like buying a car, second-hand car. You don't want a surprise when you're driving it away.
Exactly.
Look, thank you for your time, Marc. Do you know what? It's really helpful to the viewer to get like a behind-the-scenes view. It's like behind a theatre curtain, how it works from a buyer's perspective and the sort of things you're looking for. So thank you for sharing that with candor and transparency. If people want to get in touch with you, is the best way LinkedIn?
Yes, so I have a LinkedIn profile. It's Marc Maurer, so Marc with a C, Maurer with Maurer. I also have an email, so marc.maurer@volarisgroup.com. So you can reach me like any day or in the night. So I'm trying to be very responsive, because you remember, timing is really like everything, and I want to be ready when the business owners are ready.
I know this will create a smile in you, but I want to let the audience know I'm about to launch a training course for sellers of businesses in order to get more for their business. So I'm going on the training and education route for business owners. So by all means, get in contact with Marc. But if you want to get more for your business, come on my training course. More details to follow next month.
Yeah, that's fine. Go first to Rob, and afterwards come to me. That's all good.
Well, I think if you can get a business for sale that is properly structured and ordered and is sale ready, it makes your job easier.
Absolutely, and it makes the process quicker, more, because I mean, selling a business is like a project, right? And it's typically a distraction for the business. And so we all should try to keep the process as short as possible, not to burden the business too much with a lengthy process.
Exactly.
Right.
Marc, real pleasure. I wish you well for the rest of the day. Thank you for your time and your thoughts.
Bye. Bye, Rob. It was a pleasure.